Hi, Warriors. I agree with Blake. Let's make this a great session. Here's my coaching advice for you today. Don't try and make your year on the last day of trading. That's a macro call from not trying to make your week on Fridays. Anyway, I thought that we would talk a little bit there. It's kind of a dead board, but we can talk about everyone here, all us moderators talk about what we're looking for in 2026. See what kind of narratives that we're looking to trade and, what we think could set up for 2026. A continuation of certain trends, possible reversal of trends. So let's go to work. So where is it? Okay, so that's not what I wanted to show. This is it. Okay. So, guys, I've been looking for what I'm looking for in 2026 is out of favored commodities, and grains are definitely out of favor. And we have this news flow that aggregates all the different sources so I'm watching Odessa because that's a choke point for Ukraine being able to get out its grains. Needs access through Odessa, and Russia's going to try and take it. Okay. And what happened when that fear was there on the invasion is that you had skyrocketing grain prices. Anyway, what's great about this is you could type in any topic and you're going to get different news sources, Reuters there, Politico, everything. Okay. So you don't have to jump around to different news sources to find out what's going on today. So let's go to the charts and I'll show you what I mean. So we'll talk about gold in a little bit, but I just wanted to show you guys some couple of grain charts and maybe you want to choose one. Plus, if grains go, there are ways to play it in the stock market with fertilizer stocks. And, Caterpillar's been one of the strongest performers of the year. Okay, so that's kind of unusual with all the problems that farmers have had because of tariffs. But here's corn. It's already tried to launch here from a double bottom. I think the lows are in. So I'd be looking to buy a pullback. Um, this is where they were after the invasion, right? This is 22. So, we had $8 corn and it's very close to recent lows. It's been doing this kind of work for about a year. Here's another one, and Ukraine produces a lot of meat, a lot of wheat. Look at that base. All right. I mean, we've been basing since 23, and look at where wheat went to on the fears of not being able to get out grain from Ukraine, which is what the scenario was when everyone thought that Ukraine would fall in 3 days, right? So even if we're not going to, take these things out, just think about maybe 50% corrections sometime next year because of the same fear. Maybe it's not completely justified, but I think Russia could take Odessa. That's why, they're not in a hurry to make peace. So, and here are the beans. They too long base that it's finally come out of, and we're getting a nice little pullback. So you know where you're wrong and look at where beans went. And I think this was a sympathy move because I don't think that there's a lot of beans that are grown in Ukraine. Those Ukrainian farmers, um, they still went out and did their work and tilled the soil and put in a crop, and there were bombs flying around. Okay, I mean, uh, just amazing the kind of courageousness they had. So this is one of them. for next year. Uh, I know that grains also have a pretty good rep for being good technical markets, and once they start trending, they're good trenders. So that's my contribution to it. The other thing I'll be looking at is cannabis, which they got hammered after the right after the signing. You know, it looked like a bit of a pump and dump, but it's gotten cheap again. And this too is a pretty long-term base, which it's already come out of. Okay. And this is another one when there was a mania. And now that they could start banking, and a lot of these can't get listed on the bigger exchanges um, yet. So it's mainly retail money instead of institutional money. So I think this could be a pretty big one. I don't expect new lows. If you know, I'd get out under new lows, but I'll be looking for something here. There was a pretty good gap. It's not, yeah, pretty good gap here. I want to see what happens into the gap next week. So, why don't I move around to the team and see whatever. Oh, we got well, K-Man's here.
Hi, Dale.
Hey,
And
hey,
Grega's
buddy.
here too.
Oh, Grega's too short term. He does 5 minute wave counts.
1 minute only these days.
Are you doing any tick chart wave counts?
Yeah, I'm trying, but don't have enough time.
All right. Well, why don't you give us your look ahead, Grega?
Yeah, I can share something. Wait.
Okay. Here, go ahead.
uh, okay. Can you see the screen?
Yeah, we've got gold up there. Yeah, 10 year and Dixie.
Yeah. Actually, I prepared some slides here as I
Okay.
was doing some research for what I normally do for the end of the year, what I'm expecting next year.
Oh, great.
So, yeah. So, I mean, here we are looking at the US yields versus dollar index. Despite US yields and these cuts expectations, we are still trapped in the very big range here, right? And
Yeah.
what I see here that the dollar is moving far away from it. So my assumption is that we could basically see a move to the upside on the US yields when Fed will be on pause with potential cuts for, let's say, they do another cut or so, and then they will be in pause. So if that would be the case, I would be expecting that actually US yields will basically try to move to the upside. So what I think may happen is the dollar in such case could possibly bottom. So as you know, I always try to link everything with the Elliott wave principle. And if I just look from a pure technical perspective on these US yields charts, we can clearly see that we are just moving sideways. We are not going anywhere to the downside aggressively. So in my opinion, we either stay stuck in this range here on both sides before we potentially try to move to the upside. And if that would be the case, then we know that most likely the dollar could stabilize. And there, what's the most important here, at least for me, is that that was a free wave decline. So this looks like it belongs to this complex correction.
Yeah.
So that's why I'm thinking.
You know, it's comforting to me, Grega, that you finally came around to this. And it's not that you've been wrong being kind of negative the dollar, because no one's been right, and you've been more right to be negative the dollar. But yeah, this is really going to surprise the market because everyone's wrong-footed, looking for, you know, the Fed's got my back type of thing. And I mean, if they see a 5% 10-year yield, I see what you have as far as the effects to other asset classes up there.
Yeah, exactly. And if we go further and look maybe at positioning on the US dollar, I mean, we are basically at the 2007, 2008 levels with large speculators. So I will not say that we are going to 120. I'm just saying that we are certainly approaching some levels and extremes, which certainly indicates that we could stabilize. We could just be chopping around here for the whole 2026 and may not see any kind of a real impulsive trends, but definitely that's something that could cause some recovery and rebound here going into the 2026. My assumption is that we will still continue to the downside, let's say in the first quarter of 2026, and then possibly when when Trump will change pole or whatever his plans are, maybe we are moving in those based on these expectations, making these trends right now, but then these cycles could basically be the complete opposite. Also, if we look then here, we are basically approaching this lower channel. I'm looking this as a line chart, and I just certainly think that no matter how bad fiat is since 2008, since 2009, when all of the hard assets are just exploding to the upside, well, the dollar is still up and trading far away, far above that level from 2008, 2009. So no matter how everyone says that dollar is, I will not say what, but I mean, still, it's definitely much higher compared to 10 years back. So dollar index in particular, obviously. So my assumption is that this cycle will continue to change the direction. And I'm afraid that we are approaching the potential stabilization here. Now, when it comes to the wave principle, also, we have ABC decline right in the previous fourth wave territory. Of course, there's a wide range because that's a long-term chart. There's a wide range where we could possibly stabilize. There could be even room for 90 area before we possibly see stabilization. But as I said, we are closely moving into that levels based on COT data and maybe the US yields if really will stabilize and turn higher. Also, I'm looking at dollar versus the S&P 500 ratio here as well. So last year, at the end of last year, I was very bullish the S&P 500. I was bearish the US dollar because I saw also this ratio that was not showing a completed 5 waves down yet here in this final sequence. I'm not saying that this will be any kind of a big reversal. I'm just trying to focus on these current developments. We'll see what market will bring us. But each time when I see 5 waves up, 5 waves movement, it doesn't mean in which kind of a time frame. It just suggests that we should be careful, right? And that maybe we could see some retracement. I'm not sure if anyone showed you on your recent interviews, maybe longer term wave counts on the S&P 500, but that's something that I'm looking for. So the idea here is that always because markets are always in progressive mode, of course, we always should expect that they will continue higher, especially stock market indexes. So in the meantime, of course, we have to be aware of corrections, and those corrections obviously will always occur through the year and for different cycles. So based on the dollar positioning and based on these current subdivisions that we can also see here on the weekly time frame, I'm just afraid that we are approaching some serious resistance up here around 7K up to 7,400, where we could potentially see this pullback coming. Not sure what can be the trigger for this pullback, but I certainly think that we have to realize that pullback will most likely occur, and that we shouldn't be surprised. But whenever we get some retracement, we know how stocks function. I think that these indexes then after a pullback will continue to the upside. Also, looking at the euro dollar, obviously this one is like inverted picture of the dollar. We're also here at the extreme longs, large speculators. So I think that maybe we will see another push to the upside on the euro dollar going into these final stages of the extreme. And then we see potential reversal later on the euro. Looking here at that's my primary wave count still. I think we discussed this with Blake already the last time when we got the CPI data, I believe. So on that day, I said that I'm still expecting this wave E. So 116 is possibly a very nice support going into the beginning of next year, and then we get this final push to the upside before market could maybe reverse lower. Earlier, we were talking about commodities. Of course, we all know that commodities are not always in the same correlation, right? But I always try to look at commodity indexes to give us some just a little bit broader picture of what may happen with commodity index based on the US dollar. And if the US dollar would really try to stabilize, this could be basically bearish for commodities. I mean, commodities could be cheaper then. So looking here, I mean, again, I'm looking from the pattern perspective. So I cannot say that that's a bullish wave count if we are just simply moving sideways here, this Goldman Sachs commodity index for the last, 2 years or so. So I think that there is a chance that we will see more weakness before market may potentially stabilize. And we also here have Bloomberg commodity index, which also shows 5 waves down, followed now by a corrective 3-wave recovery. So again, the question is how, of course, this will be impact from moves on metals next year and energy in particular, right? And again, if you look at metals, here it's a longer term wave count for gold. Notice that we have seen a very nice, strong extended push to the upside. I think that we could see a wave 3 top next year, and then possibly we'll see a pullbacks. Now, there could still be opportunities, obviously, on metals, but I think it's very important to be just patient and wait on some consolidation, something like this. So it means that it will take more time to unfold. At the same time, maybe look at the gold volatility. Whenever this one moves to extremes, we have seen important reversals and tops. And this has occurred recently, not to mention the silver, the blowout top that occurred this week. So I think that if really US yields would come to the upside, if dollar would stabilize, of course, this would also likely mean that gold will also have a pause, not turn bearish, but have a pause.
An interruption in the debasement trade.
Yeah, we will see. But,
just an interruption, not the end of it. Just
exactly.
An interruption.
So,
yeah.
I mean, that's what I'm expecting, but I would be very, very careful. Maybe I would be much more interested in more, how I would say it, more. It would be easier maybe to look for longs on gold after a pause rather than silver, because silver can be so volatile here at these levels that you could easily see 10% moves in each of the direction. And I just think it's much more hard to trade at these high levels, and maybe much better opportunities could show up on gold when this one will try to take over, because everyone is just rushing into silver and just putting gold on the side. But I just think that whenever we see some stable price action, that gold will again one that we took over.
Is a gold silver ratio which really collapsed? What's the count on it? What's the count on it?
Let me just look if I have it here. That's basically a chart from 2-3 weeks back.
Okay.
So basically,
we are already the lows.
Yeah. Yes, we are already at the lows, and you know, it was much easier to be bullish silver when we were trading up there.
That was we talked about. Yeah, exchange your gold for silver up there. You know, if people did that, that was a 40% gain by having more silver than gold without even changing pretty much your physical metal position, just on the ratio trade. That was huge.
Yeah, I mean, and if we now look for the same concept, but just on the different side of this coin, then that's why I'm saying that maybe gold could be still could come back and will stay bullish, more stable for much longer, which obviously has been visible through the history. While on silver, we have seen massive reversals later on. So maybe one last thing, it's going to be, let me just find it here. maybe Bitcoin. So we were talking about these cycles in the past. Bull runs last for around 36 months, 3 years. So we basically topped on October of this year, exactly after 36 months of a bull run. And now we could be falling into this correction that will last 12 months. And maybe the most interesting chart, because we know that everyone was so rushing into Bitcoin that it will move, I don't know where from current levels, but I just think that this market has to press the price even lower to liquidate more of traders, especially those that are long-term holders. So here we see the long-term holders value below 1. Notice that we are above 1. Indicates that more long-term holders are selling at a loss. So more long-term holders who are, as you know, very bullish, if more of those will start selling at a loss, it means that market will really, really reach the extreme pessimism, right? So that's something that has occurred a few times here in the past, over the past few years, and we are not here in this levels.
What do you think the pain level for those people to say, hold on for dear life, I'm getting out of this before it kills me at the bottom? What, 74, 65?
I think there is room for 50 to 60,000.
Okay. That should do it.
I mean, people will get crazy even if we'll see just 10% drop in just a few days. So their investors, traders will be more
nervous.
They're more nervous if they will see a drop, let's 10% in a 1 day or 2 days, but it could be 10% in a month, but they will be fine. So we have to see some sharp moves to the to the downside to cause this fear that could potentially lead to a reversal.
What a great presentation.
So thank you.
Beautiful. Yeah.
And just FYI, we're putting together a blog for the, it'll be the beginning of next week, that will be posting some of the stuff that we're looking for going into 2026. So make sure you guys and gals are looking for that.
You know what makes it great, Grega? I agree with everything you said. I agree with everything you said today.
No.
It better fade us now, everybody. All right. Thank you, buddy. That was nice.
Thank you. Thank you.
Happy New Year to you.
To you as well, and to others in the team, of course.
Yeah, everyone.
And listeners.
Okay, and 2026, we're going to teach people our tricks. Okay, and you do that every time you come here with your magic bag of waves. So let's bring K-Man in. K?
Hi.
I know that we said hello earlier. What are you looking forward to in 2026?
A good health and loads of pips.
Okay, and the health, I think you do a good job of taking care of yourself. How are we going to gather a bushel basket of pips? What kind of narratives? Do you have any kind of views that?
Yeah, I'm still putting them together because I don't think that 2026 will be as obvious as 2025 may have been.
Okay. That's good.
And yeah, there will be different moves, but I think one of the things I've been thinking about and looking at is that I reckon that the correlation that we have seen slowly change with some intermediate shocks, because change never comes at once, but comes in different legs or at different times and then gets stronger. But I think that the positive correlation that happened at times between equity markets and the dollar, meaning that if equity markets go up, the dollar goes up. We have seen some episodes of that over the course of 2025, but then in different stages when due to Trump and stuff, what he was doing, we went back to all the correlations like stocks up, dollar down. But I think in 2026 we may see an evolution of the positive correlation, and as in, if stocks continue to go higher, which that could be supportive for the dollar, but if stocks go down, that could be negative for the dollar, and maybe bonds are going to be the same. So, in other words, a better correlation or a deeper correlation between what is bad and what is good in 2026. That's one of my thoughts that I'm trying to put into words as well for what Blake was saying on the blog. But I think that's going to be a shift that we are going to see.
Yeah, so when bad is bad, because right now bad is good for the market because
Mm,
people think the Fed has their back with bad news. It just means more money printing.
yeah, but
But
I think what actually happens is it happened gradually over the course of 2025 is that it's not really the Fed having the markets back, it's the Treasury. And
interesting.
some people may find those kind of comments a bit crazy, but I actually read them no later than this morning, and I don't disagree with those. But I think there are risks in the whole scenario, and I don't know exactly how they are going to unfold yet for markets, but I've been thinking about it as well, and a couple of times people I've seen them talk about it and writing about it as well, and I fully agree. There's one thing which I don't know yet how it's going to impact markets, but I am relatively convinced that AI and all those tech developments are not going to create any jobs. Actually, on the contrary, they are going to destroy human jobs. But I don't know yet how that's going to really filter through. But I think we are going to see more of it in 2026. So AI needing a lot of money, needing to borrow a lot of money, so may not be too good for bonds. And at the same time, the real jobs market, the human jobs market deteriorate. That is something that I'm thinking about
Yeah,
as
but
well.
Cayman, that's not
Yeah.
necessarily something bad for the economy.
No, for investors. Oh, investors has no
Yeah,
money has
because
no money has no
that
fear.
means increase of productivity, right? I mean, I understand the human part, of course, is not good, but we're talking about the financial markets at the moment, right? We have to differentiate.
Yeah, yeah, but that's why I'm saying, and I'm not sure how it's really going to impact yet, but I can see a material deterioration of the job market
No, I agree with you
within the
on that. Yeah.
possibility. That means that somewhere some of the indicators we are looking at, or the Fed is looking at, for that matter, about consumption, etc., may get a severe knock on the head. And but again, I don't know yet how it's really going to impact deeply, because yes, productivity could go up, and as I said, money has no fear or no smell or whatever. But I'm not sure yet how it's going to completely develop.
Well, if Grega's wave count in the 10-year manifests, I think it's going to most likely pressure everything, right? 5% 10-year yields.
Could be.
Yeah,
Could be, but
it
then
could.
you weigh doubly on the consumer, because if I'm right, and the job market
True.
may deteriorate a little bit, and yet they are going to have to pay higher prices for mortgages, etc., then you are going to have like what is it? A
Yeah.
combination, the risk at least of a combination of 2001 and 2008 together.
I
They
think
already say that.
higher rates are inevitable, no matter how you look at it. And that is why I think, and we've said that with Stelios multiple times, that's why I think that QE or any other forms of debt monetization coming soon is also inevitable.
Okay, they say that 22 states in America are already in recession. That's
And how many would there be if they measured inflation honestly?
All of them.
Probably.
Yeah.
And not only US, right? Let me be
They're
very clear
global.
about it.
It's a global thing.
Yeah. If we measured inflation honestly, which would also mean that we would have to adjust according to the real inflation growth, I think we would realize that we've been in a stagnating environment for many, many years already.
It's like 1971 all over again, where there was easing into, we already had high inflation.
And that's why the political divide and situation is not going to become any easier,
Yeah.
because people are angry because, you know, people don't live by they don't live their lives by the fake prints of indicators. They live by their lives by having to buy the actual stuff they need. And,
Yeah.
you know, the real inflation will impact you no matter what the reported inflation is.
Look at that chart. So Blake, would you sell a 61.8% correction or halfway back on this in gold for another leg to the downside?
I sold gold this morning.
Okay. All right.
Yeah, in the chat room, because we're at the 38% retracement. Pretty
Okay.
impulsive move yesterday, although, and we could probably talk about like we should probably talk a little bit about the metals move, predicated on, you know, a lot of CME margins rising. I think that's one of the catalysts that drove silver and gold lower, and palladium and platinum, obviously. But the move was probably pretty startling for anybody who was long. Obviously, you know, when you look at silver, silver's a great example here. You know, we rallied, came out of this, you know, channel. We had this potential throwover, and actually, I probably just need to adjust this a little bit. Probably looks more like this. That's my fault. So you can see we you know, fell back into the channel. We're probably struggling right here, as you know, as we're, you know, dipping back into that channel. I think this is all really good resistance for precious metals. So you know, whether you're talking about silver or whether you're talking about gold, you know, we start breaching some of these levels of support, and you know, you're going to have some, you know, long liquidation issues. We're also obviously end of year flows probably startled a few people. Yeah, so I'm selling into strength today. As you can see, I mean, gold's just hit that 38% retracement basically, and is rolling
Came off
over
pretty
now.
good. Yeah, nice.
Yeah.
Okay.
So I'm short from, you know,
There's a-
about an hour and a half ago or so, right around here. So yeah.
Okay. Yeah,
There's
there
a
you go.
funny thing to watch in silver, because it's been extremely volatile and violent. And
Yeah.
if you put FIBs on the where we started after Liberation Day up to the high, we stopped that moved lower. We stopped right on the 23.6.
Liberation Day going
Yeah,
way
there.
back over here.
I think it's there. It's April, yeah, April 2025.
Yeah,
Yeah,
that's it.
it's crazy how Fibonacci's
71
work.
bucks, somewhere around there. Yeah.
Still
Yeah,
amazes me.
It's well, Fibonacci, you know, for anybody that doesn't use Fibonacci's, you should. It's really the main tool in my toolbox, and always has been. Fibonacci's are numbers, and they're a sequence of numbers that are incorporated in pretty much everything in the world. Anything that has ever been created by God it has Fibonacci sequences in it, and that's why your mind is already in tune to it, and that's why automatically people look at a 24% retracement, not because it's a 24% retracement, because naturally that's where you're going to say, you know, that's far enough of a move that we've seen, you know, for a drop to get a bounce. It's because it's innate in your mind, and it is in everybody else's. That's why these sequence of numbers are so well respected. It's not because everybody's looking at the same chart and the same number. It's because it's in your head. So that's why you get reactions.
God
from
was a
these numbers.
mathematician. God is a mathematician.
That's right. That's right. So anyway, yeah, precious metals are something that's really interesting, and I think a lot of us are paying very close attention to the moves that happened yesterday. K-Man, what do you test the moves that we saw yesterday to?
I think in two is asking there, how do you think China restrictions will affect silver? So first of all, silver has been a story of supply and demand, right? Been talking about it for months. And unfortunately, it's also used in warfare, as I've been already saying, and they are throwing hundreds and thousands of drones at each other. It's a conductor. It's one of the better conductors. So whether you have an economic revival, first of all, I thought metals would have like a very good chance of rallying if we got a Chinese revival, but we didn't even have to wait for it. We had wars and AI and solar panels, whole deserts being built up with solar panels. Um, and I think the story may continue for a while, but then to reply to what Tu asked exactly about the Chinese restrictions, Tu, don't you think that this market of what we've seen since China said that they would put those restrictions in place, we have seen a rampage higher in silver. The thing is, those come into effect the 1st of January, and I have like this kind of sneaky traders feeling that come the 1st, 2nd, or 5th of January, I don't know when, that all of a sudden we are going to have a little bit of a black hole and silver trades back at $60 because they've bought it all before the deadline. So I think there may be maybe something, but if it continues into January, then yeah, I don't know when we are going to $100 probably. All right, so yeah, that's about it. That's about it on silver, and I tend to agree with Grega as well about gold being relatively more stable than silver because there's different forces at play over there. Spoken about that supply, etc. Okay, you've got the debasement trade, and if we get a bit of a deeper slowdown in the US, perhaps the gold will be an extra instrument to have, I guess, and geopoliticals for as long as they don't stop fighting over there, and that China, we've seen those massive drills that they are going to have around Taiwan. It's another reason why I think in the medium term we shouldn't be short gold, but again, we can have setbacks, and I don't know where we are going to end the year for the next 24, 36 hours. I don't know.
Yeah, I'm gonna use this, these situations like what you're seeing
Yeah.
here. This is a false breakout, and if we close below 4,400 by the end of this week, that's a false weekly
Yeah.
breakout. You can see there. Very divergent relative strength. Dale loves this type of stuff. Hopefully, it allows gold to really pull back more aggressively. I'm really just hoping for any dip back down to 4,000, maybe even a little bit. It depends how much you can shake the tree here.
Yeah.
But you
We
got
might
to
have to.
use these
Yeah.
dips as buying opportunities. You just have
Oh
to.
yeah, I would too. I would
So
too. If I see 4,000, I'm going to buy again. Yeah.
yeah, and it's where you start to get longer term people, staking their claim, which I 100% agree on situations like that. Hey, I just wanted to mention, for everybody listening in, this is a good opportunity to take to make sure that you guys join our newsletter. It's right in the middle of our website. It's this little, whoops, not there, right, this little yellow spot says something big is coming. Make sure you join our newsletter. It is free. But I'm going to tell everybody that's listening in right now, every single one of you will benefit from trading analytics. And I'm just going to leave it at that. Every single one listening, and it won't even cost you a thing. So there's a lot we're doing in the next few weeks that are coming out with trading analytics as we launch our product. So if you want to stay up to date and be the first to know, make sure you just sign up for our newsletter. It's free. You don't get plastered with a bunch of stuff. You just get a newsletter every weekend with our week ahead video and, you know, some macro updates, you know, that type of stuff. But also we're updating you on what we're releasing with trading analytics. And like I said, every single person that's listening in right now, you will all benefit, and it won't cost you a dime. So make sure you will benefit in several weeks when we launch trading analytics. So make sure you guys get signed up for that newsletter. Like I said, I just want to take an opportunity to say that because we're going to be wrapping things up here in a few minutes. So before we wrap things up, let me just say this is like the last couple of days of the year. There are going to be some end of year flows that are you know, pushing around the market. We are going to have a fix today. We're also going to have a fix tomorrow, aren't we, K-Man?
Yes, we have. We have one tomorrow, and I don't know how much there is left to do, or how many people are going to wait for the last minute, which is not really clever. But some don't have the choice, right? Because
Right.
as I was saying yesterday, they are using that end of month, quarter, year benchmark rate, so they will still have some stuff to do. Of what I've really been looking at, really equity moves and etc., even some of the bond moves over the course of the year for the year flows, I got the impression, and if you look at markets, how they react right now, we haven't seen any. Well, we have seen some moves, yeah, but we haven't seen. I don't think the big imbalances that we may have seen other years are there this year, and so I wouldn't be surprised to see a few wobbles and a bit of ping pong here and there. But I'm going to say we are going probably to strand not 100 miles from where we are now in markets.
All right. Well, you know, if you look at the S&Ps, I mean, this last leg higher, we're not even at a 24% retracement. We respected that last week. Well, actually, the 29th, that was be yesterday. Sorry. So you can see we're just finding support here. We are not even a hop, skip, and a jump away from new all-time highs. We had new closing all-time highs last week. You know, as we closed out the week. And I think the 161% extension right here at just shy of 7,000 is still unfinished business. And that's 161% extension of the Liberation Day move, excuse me. And that's coming in, you know, just a little bit higher than we're at. So that still looks like someplace that, in my opinion, is unfinished business and could you know, finish off wave 5 should we get there. Whether it's this week or early next week, we shall see. Any last minute comments from Steve today? I heard your voice, Steve. Obviously, any views as we wrap up our last show of 2025?
Good question. It's been a massive year, obviously, for metals. I still think the dollar is vulnerable. We might need to see some corrective moves to start the year, though, in metals before we resume. I need to be very clear in that, right? Having to do with my yearly predictions, I mentioned it before as well. I think that at some point rates are going to get out of hand, and probably my prediction is that within 2026 we're going to have to go back to some form of quantitative easing, and that is going to definitely be a huge driver for the markets.
A melt up, Steve, when that starts?
Perhaps initially,
Yeah.
or perhaps the catalyst for some kind of a you know, final push to the upside.
Mhm. Okay.
All
Look
right.
like if you looked at Grega's stuff, kind of looks like it's kind of smooth sailing until April. You know, a lot of people are saying that, you know, everything should continue as is into the first quarter at least. So anyway, that's an observation.
Yeah, no,
I mean, in my opinion, it's rather easy on some occasions to have a long-term outlook of things and be correct about it. It's somewhat easy to have a short-term view of
It's
things and be
easier.
correct. The
Yeah.
medium term is always tough because it's very hard to predict the timing for swings. You know what I mean? So I never go into the game of saying, oh yeah, April is going to be, you know, the month that things will turn around or whatever. I think these predictions are very hard to make.
Do you have it, Steve? Do you have any planetary aspect predictions? I know how much.
Yeah, they're my favorite, absolutely.
Anyway, I thought maybe you were looking at a zodiac or something. Anyway, okay.
Yeah, right. That's
Well,
totally.
happy birthday, everybody. Well, it is a birthday. We're reborn every year to given another chance to move closer to our goals and dreams. So I hope that everyone hearing my voice, as I say on X, that those things manifest for you this year. And
One thing is for sure is that the beginning of every year is, is an opportunity, right? It's purely psychological, mental, of course. We know that.
right.
But the beginning of every year is always an opportunity to make a fresh start, set some goals and make a fresh start.
Yeah. Turn the page.
And then throw them in the bin by the 15th of January.
That's right. If there's ever a worse time to be in the gym, it's literally the first 2 weeks of the year, because that's when everybody is there.
Yeah.
Yeah. Anyway, but all right. Well, guys, I want to say, it's been a hell of a year in the markets. We've had some great volatility. Next year, we are going to have way more volatility. Remember, we have a New Year's offer that's going into effect. Let's see, that would be on Monday or on Thursday, on the 1st, for trader funding program, 30% off instant funding or one-step assessments. The discount code is New Year 26, and that's going to go all the way until the 18th. We're giving people plenty of time because, obviously, and that's going to be Sunday the 18th. The reason why we do that is because there's a lot of people that trickle in late next week. So just remember, you got a couple of weeks for to take advantage of the volatility that's coming. I think next year is going to be one of the most volatile trading years, because we've had such a long period of a sustained uptrend in the equity markets. I think next year is the year about consolidation and volatility. So you guys want to be prepared for that. As we complete, Grega, look, I want you to confirm this because this is how I see it. We have a couple of ending, Elliott wave, patterns here.
Yeah, I would label a bit different, but definitely it's a very big resistance.
Wait a second.
Out there.
He told you that he wants you to confirm. He didn't tell you to.
Yeah,
say
I
your
didn't ask for your
opinion.
analysis, buddy.
Yes,
I just
just
said yes
confirm.
or no.
Say yes.
Yeah.
He doesn't.
Yes,
But
we are
You
in a
didn't.
fifth
You didn't
wave.
get the message, Grega.
But think about this. Think about where we're at, guys. I mean, this is channel resistance. If I'm right in my very ridiculous Elliott wave counting here, but if we are at the top of like a channel and we're going to have some sort of consolidation, or 2026 is going to be more of a volatile type of move, as we make our way back down towards the lower end of our channel over the next year or two. I think there's going to be a lot of volatility, and you guys want to be around for it. And this is the time where you want to take advantage of it. So next year is going to be a great year.
But higher we go in price on these indexes, lower are the pullbacks in percentages. So maybe just, like 10-15% of the pullback would be a lot for these kind of indexes, and it would be around trading then where 6,300.
Yeah.
A two-way price action is good for all of us. Moves that go straight up like this are no fun for anybody.
Wouldn't you think with the midterms, guys, that if there are going to be market problems, and we know how involved President Trump is with market direction, that you'd want to get it out of the way, any kind of correction in the first half of the year, so that going into the midterms, the market is doing well, maybe making new melting up then, instead of
Yeah,
instead of it blowing off now and then selling off into the midterms.
well, I think a lot of it, Dale, is going to have to do with the new incoming Fed chair and who's selected and how the market consumes that. Because I do think that if Trump brings in a yes man, like somebody that
No
the market
way.
perceive,
I don't
but
believe it.
the market really perceive. I mean, you
How
have
about-
Hassett's running around in circles, trying to tell people that Fed is independent, blah blah blah. But we all can see through his bullshit. It's not. He's just saying what the market wants him to say. But when or if he gets put in the Fed chair role, I think the market's reaction is going to be a lot different if it's Hassett. I think the market's going to go, fuck this. Excuse my language. I'm selling bonds, equities, and dollars, and that's going to be a big issue. If it's maybe a wash or something, maybe the market's going to be a little bit more tame. But I think if Hassett gets put in, we're going to see a lot of volatility, and it's going to be lack of confidence volatility, which is not good volatility, guys. So. Hello.
I mean,
We all left.
All right, guys.
Silence is golden. Oh, I
Don't
dropped an
just-
F-bomb. Shit.
Don't
sorry.
just count your pips, count your blessings. Everyone have a great holiday.
Yeah,
And we'll be back Friday.
that's
Have a
right.
good end of year, everybody.
Yeah. Merry Christmas. Oh, we're already past that.
Yeah,
Happy New Year.
Happy New Year, guys.
Dale,
New
thanks
Year.
for guiding us this year. It's been awesome, and
Thank you, Dale.
K-Man and Grega and Steve. It's been a pleasure to be with you guys all the time.
See you, team.
It's been a pleasure
Thank
to be
you.
with you guys.